Hello, this is Jenny Clark, your Solvability trainer. Today what I'd like to talk to you about is preparing the incurred cost submission. I call it Crack the Ice because it's about the incurred cost electronically. DCAA wants you to prepare one of these using their spreadsheets, and I'll talk to you about what's included and how to get there and what you need to do. So on our agenda for today, we're going to talk about the requirements for the ICE. We're also going to talk about the pre-ICE steps, the things you need to do to get ready. And then I've got a checklist for the ICE, which hopefully is going to guide you through this process. So let's start by talking about requirements for the ICE. If you have cost plus contracts, cost reimbursable contracts, you're probably going to have to create an incurred cost submission and incur cost electronically. That's because you have billed during the year at provisional or estimated billing rates for overhead and G&A. And the incurred cost submission is how you settle up with the government and say, here's what our actuals were. We want to be able to bill our variances, or if we underran our rates, we're going to owe the government some money, and we need to figure out how that's going to work. You're preparing the incurred cost submission so that at some point in the future, maybe 2 or 3 years later, when the auditors get your number and say it's time to come and look at it, they will review the ICE, and so they'll go through all of the elements. They'll do an audit at your site and figure out how you're going to settle up with the government. Besides the cost plus contracts, that's pretty obvious. T&M contracts, which sometimes are described as firm fixed price, level of effort, may require an ICE for 2 reasons. One, if you have ODC of the direct cost or direct travel on these types of contracts, and those have G&A or general administrative cost applied as a percentage, you've got to settle up because there's an indirect rate applied, and you have to prove what your actuals were compared to what you billed. The other reason is normally with T&M contracts, you'll be asked to complete a Schedule K, which is a list of the labor hours by labor category, including the billing rates that you billed for, and you're trying to prove that those costs were incurred in your books, and that's the thing that they're going to come and audit. It's called the Schedule K. What creates the ICE requirement is in FAR 52216-7. That's called the Allowable Cost and Payment Clause. And we see allowable cost and payment on most cost plus contracts. There's some other cases that it comes up. It could also be on contracts that are incrementally funded. But you just know that if it's cost plus or T&M or it has allowable cost and payment, that's the thing that's going to kind of open you up for having to prepare an ICE. The ICE is due 6 months after the contractor fiscal year. Most small businesses that I work with have an ending of December 31st, so their ICE is going to be done by June 30th. Now the other thing is you have to submit your ICE by that date. They may not come back and audit it for a couple years until they get around to the backlog that they're trying to cover at DCAA or Defense Contract Audit Agency. You still need to submit it on time. They will do a review they'll call it an adequacy review. They're going to open your package, take a look at it, see if it looks like most of the schedules are complete. If they aren't, they'll write you back a letter that says, well, you need to re-prepare. This is what we saw to be missing. This is the things that we question. But you do need to complete it on time, even if you don't think you have it all right. You will have time to make some changes. But the important thing is to get it in there on time and hopefully get a letter back that they say it's adequate. But you can always revise it if you need to, as you find differences that you need to change. The other thing is, before they actually come out and do your incurred cost audit, they'll contact you and say, oh, by the way, is this the latest version? And then you'll have an opportunity to send a revised version if you need to. Well, here's an item for discussion, and there's been a lot of discussion on this. Depends on who you talk to. If I don't have any prime contracts, do I have to prepare an incurred cost submission? Well, maybe you don't, because you might not have to do the incurred cost submission if you don't have any prime contracts, because who's going to audit it? You can send it to DCAA, but they're only worried about people that are prime contracts, And sometimes on subcontracts where there's a requirement that you were included as a subcontract, they may have to do it then. But in other cases, if you don't have any prime contracts, you may not need to do it. And this is an area of contention between prime and subs. A lot of times the prime will say, I need you to complete an incurred cost submission. And on top of that, I want you to submit it to me for me to review. That's a question. I don't know. I've been told that they can't do a review. I've been told other companies just say, well, I'm just going to send it to them. They want it. They're my customer. They can review it if you want to. It's really a similar thing to, do you want your prime to be able to do audits of your books? Do you want your prime to be able to review your proposal rates? And there's a lot of discussion on this these days. So just be aware that these are items that should be discussed as you're doing your research and trying to figure out what's really required. Preparing the ICE is a good exercise to go, even if you don't have to do it, because it lines you up to be prepared for the point at which you do have prime contracts, and you're going to want to have something to back up your rates. You're going to want to have a history of knowing what those are. You want to have a track record for management so you can help them understand what the pricing is that you're involved in. So now let's talk about the pre-ICE steps. These are the things you want to do ahead of time before you start getting into the guts of that spreadsheet. I know you want to get in the spreadsheet, but here's some things to take a look at before you get started. Number one, I would print out your general ledger detail. And I would review transactions to make sure they're correctly classified. The number one thing I'm looking for is costs that are unallowable: interest expense, entertainment, company Christmas party, late fees, GSA fees, penalties, all of those things. I'd look and make sure that those aren't mixed in with my overhead and G&A accounts. I want to make sure that those are correctly separated and they're listed in my unallowable accounts, which as a convention with a government contractor is going to be your 900 series accounts. You also want to take a look for what's called direct cost non-billable. Some people call it non-reimbursable. Again, this is a matter of discussion. There are those that say if you have per diem and somebody exceeds the per diem, some people say that just goes in unallowable. Other people say, no, it's a cost of the contract. I just can't bill for it. With the small businesses that I work with, my fear is that they'll accidentally bill it if it's anywhere up in their allowable cost or in their G&A. My recommendation to them is always to put it down in the unallowable section. And when they do need to prepare the incurred cost, at that point I would reclassify it for the purposes of the spreadsheet to show, yes, I had this unallowable cost. Here's my adjustment column where I backed it out, so it's no longer included when I calculate my rates. And really that's to prevent accidental errors. So after you've reviewed your general ledger and checked it out, moved things around, and think about it, there's a lot of gray areas when you're starting to move these costs around you, so you need to allow yourself to have time to research it yourself, ask some other people in your group for it, and sometimes even go and get a management decision on where should this be correctly classified. So allow yourself some time for that general ledger review and take some time with it. The other thing is, when I do these, I usually print out hard copies. I will have the electronic copy, but I make sure that I highlight it, I put it in a book. I want to have it all together because it might be a couple of years before it comes back, and where's the backup for all of this stuff? You might not be the person there when the auditor's there. The other thing I'll usually do is I'll run my indirect rates. If you're running Deltek GCS Premier, there's a report called a Statement of Indirect Expenses. If you're doing it in a spreadsheet, however you're doing it, you want to show the general ledger accounts, the amounts in those accounts, how you calculated the total pool cost, the total base, and how you came up with the different rates. And you want to show how fringe applies to overhead, how it gets applied to G&A, and so forth. So you definitely want to run your indirect rate reports. You also want to run revenue reports. That's going to be your cost by job. And the thing I'm looking for there is, what are my job numbers? What prime contract? What customer? What type of information do I have in my system about that? How much did I bill for that customer? How much did I recognize as revenue in the fiscal year that we're talking about? I also want to look at cost reports. And to me, for the most part, cost reports are the direct cost reports on the contract. So for every single contract, what was my direct labor? What was my other direct cost? What was my subcontract cost? What was my travel expense? I need to have information about all of that. I'll also run an income statement, general ledger detail, trial balance reports. Again, I print them out and put them in a binder, but I'm also going to have an electronic copy. My plan is, while I'm working on this, I'm going to put it in a folder, but from time to time I'm going to back it up to a flash drive, put it on a CD, stick it in a book, do something so I've got all that data backed up. Because you'll end up with a number of versions, and you want to make sure that you don't lose that if somebody decides to change servers or move something, whatever. You want to have everything. So I save it in a folder on the computer, I print it and put it in a binder, and then I usually have my own flash drive and other things to protect myself. Sometimes I zip it up and email it to myself. This is the checklist for the ICE. I got it actually from the Incurred Cost electronically itself, and I thought it was an easy way for us to read and see where we were on any particular area. Some of these are pretty straightforward. There's just spreadsheets where you have certain calculations showing, but I wanted to highlight the ones that I find to be particularly time-consuming. So you can see I've got A through F. Those are really where you show how your pool calculations are done. So it'll have your general ledger account, your account name, your balances year to date, and then in another section, I'll here's my direct basis. So that'll be direct labor, direct travel, and so forth. So those are all, it takes some time, but you can get all of that figured out. In those, I think I mentioned just a minute ago, you want to show, here's my my pool cost, and then there is a place where you put an adjustment column for anything that's unallowable. And again, I said I'd put my unallowables at the bottom of the section, so it's real easy to see where they are and how I excluded them. Schedule H, that one takes some time. You've got to have your job number, your task, your prime contract number, your customer in a lot of cases, because you want to be able to tie this back to billings, and you want to tie it back to contracts and things like that. You've got to have all that information handy to make it possible for you to understand it, and certainly for an auditor or an outsider to take a look at it. So Schedule H has all of the contract costs broken down into those different elements. And then Schedule H, there's also an area where you show, here's where I applied my overhead at my provisional rates, here's where I applied my overhead and G&A at my actual rates, here's the difference that we're having to deal with. Number I. Schedule I, that takes a lot of time too, and here's why. It's the cumulative schedule of cost. So what they're looking for when you have a contract that went over 3 or 4 years, they're looking for you to show the history for previous fiscal years, whether they're settled, which means there's been an audit and everybody's settled up, or it's still pending audit, so that's called claimed, or whether it's in the current fiscal year. You also have to show cumulative billed. So again, you'll go get copies of your billings, and you need to show it by, usually you'll have the detail by fiscal year, but you'll show cumulative billed through the current fiscal year. What they're looking for is, here's what I billed using these set of rates, here's what my actuals were using my actual rates, so what's the difference? Now the trick here is, think about it, your billings typically will include fee. Sometimes there's a fee withholding, so you do have to include your total billed amount, including the fee and the withholding if there is any, in order to get the billing total to make sense. But when you're doing the comparison columns, it's going to be cost minus cost, and the fee and billing are really just there to tie things out. The other thing is, every year as you prepare the subsequent ICE, if you settled from previous years or you had changes from previous years, you've got to go into the other subsequent ICE information and update that. So very time consuming, so be sure you take a close look at that. The other one that I find to be a real bear is the reconciliation of labor to payroll. What they're looking for is, prove to me the labor expense that you've charged me on billings matches what you paid out to employees. So think about it. They're looking for, here's my timesheet, it went through December 31st. I want you to prove that that was the gross wage that was paid to those employees. Schedule L is particularly tedious for several reasons. One is, you have to tie your gross wages to your 941 reports, which are your quarterly payroll tax reports. Well, gross wages on a federal tax report is usually it has a line for gross wages and a line for federal wages. Well, federal wages is excluding your 401k and cafeteria plan type expenses. So there's a lot of detail you can see going into all of this. So I've got examples of all three of those particularly nasty ones that I wanted to go over with you. The other thing with labor to payroll is because you've got quarterly reports and maybe your fiscal year was ended in September, well, that's going to be a different set of quarterly reports that you have to use. And then the last thing is you have wages earned in December but paid in January. So you've got to either pull in and add in some accruals, or you have to take them out at the other end. So it's kind of complicated to do that. Schedule M is management decisions. That would be major changes. If you moved into a new building, you've got new cost and different things like that. That could be a management decision. Another thing would be the decision to create a value-added pool, such as material or subcontracts handling. That would be the kind of thing they're looking for, is what's changed about your account, upgrading an accounting system, changing who the controller is. Those type of things, changes in management, would be the type of things that go on the management decisions. And it's really just to say, hey, what's different between now and last time, and it's to help them prepare. Schedule O is for contract closeout data. The contract has to be physically complete, and what they're looking for is, have you invoiced all your cost, and are we reaching a point that at some point in the future we're going to come out and you'll do a contract closeout and we'll get that done. So it's kind of like planning for them more than anything else. Supplemental data, what they're looking for in those schedules is comparison. They're looking for trends. If your total fringe rate in one year was 25%, the next year it's 35%, they're going to ask you what it was. They could look at it by realizing that, okay, at 25%, I had no 401k, I had no company paid health insurance. Those are the kind of trends they're looking for. Explain to me what's different, and that's what the comparison is. They're going to be looking to say, okay, what should stick out for me? So you compare overhead, G&A, facilities. There's also schedules where you have to talk about the top 5 highest compensated executives. That's also usually the company owner, any executives that had a key decision making. And so sometimes you might have more than 5 depending on, okay, this person was highest paid, but this was a higher executive level. They want information about that because they want to see what kind of compensation people are getting, what their 401k might be, if there are special benefits that they get that others don't receive. They're looking for those kind of things. And then the new one they've added is cost plus contracts, where our company is a subcontractor. And that is, obviously, if you're a sub to a Boeing or a Lockheed or whatever, at some point Lockheed is going to submit their incurred cost and include yours. And so they're looking for how to identify which things I have to do in assist audit. Over the last several years, DCAA has been under tremendous pressure to get audits done more quickly, to do more with less resources. And so they've changed their methodology. They got so far behind with incurred cost submissions that it was affecting people's ability, companies' ability to do business. And so what they did is they reduced the number of audits to be performed on small businesses. They call them low-risk audits. So you might be audited in the first year, but after that you might be part of the sample. You might send your rates in and they're pretty close, and they'll say, well, here's a letter, you're good to go. The other thing that's going on is they found that an incurred cost audit is a special type of audit, and so they've set up special audit teams of people that really do this all the time, and so they have a lot more skill at it. And they're trying to go out and work with people and do several audits at a time, so they can catch up and say, hey, we're here, so we're going to look at we're going to look at 2009, 2010, 2011. All one right after the other, because it sure is a lot easier to do them in sequence than it is for them to come do something and then come back 2 years later and 2 years later from there. But the main thing to do is go check DCAA.mil. By the way, that's where the ICE model is. I also find it really useful to look at, there's a document on DCAA.mil called Information for Contractors. That's got a section in there about the incurred cost procedure. That's worth looking at. And also the contract audit manual is out there, and that's really what the auditors use to do what their part of the job is. So a lot of companies will go out there in the CAM, which is what his contract audit manual is called, and they'll read the section so they know what to expect from the auditor when they come by. So why are we doing the ICE anyway? Well, we're doing it because it proves what our indirect rates are. And we just have to be able to settle up with the government point. The other thing is sometimes you'll be told, oh, you don't need to do an ICE now. We'll wait till the end of the contract 5 years from now. Then you do one. Don't do that. Don't do that. You'll also be told that, oh, don't send me an invoice for every fiscal year. Again, we can just wait till the end of the contract because, I don't know, year 1 you might overrun, year 2 you might underrun. Those will offset. Everybody will be fine. That's not true. Money could go away. Other changes could happen. You need to make sure you're getting even every year and settling it up separately and promptly. Once you know what your rates are after the close of the fiscal year, you should go ahead and bill for those differences. You want to get the differences in the pipeline. You also want to keep in mind that the indirect rates that you're submitting to the government as your actuals for the year, that's going to have an impact on your contract cost. If you overran your indirect rate significantly, your program managers are going to be really upset. The reason they're upset is because money they had set aside to pay these 2 guys to finish that little task has just been sucked up by that indirect rate variance. And of course, they always look to the accounting department and say, it's your fault. Well, the accounting department didn't spend the money. We're just reporting here. But at the same time, one of the things that I think executives and program managers need from you as a responsible person in the accounting department and somebody that understands this costing, they're looking for you to do a good job predicting and to inform them of when you see trends that are causing you to overrun your rates, because that's going to be a risk that they need to know. And the same thing is true underrunning your rates. If you underrun your rates, you're going to write the government back a check. It's not really that much different from when you're doing your April 15th and you say, I'm going to do an IRA, because either that or I give the government back money. So getting good at indirect rates makes you a better cost accountant and more valuable at your company. So let's just talk about GovCon indirect rate math. As everybody knows, an indirect rate is a calculation where you take a pool of related costs, fringe costs, for example, divided by a base. There's a relationship between the cost of the company benefits and the salaries of the people in the company. And that's going to be an indirect rate. And that's really what we're talking about. So what they're asking you to do is prove the indirect rate calculations back to the general ledger. General ledger is everything. That's the income statement. It ties out to everything else. Your bank's account gets reconciled to that. So there's a lot of data in there, and they expect you to use that information to be able to prove what these indirect rates are. So obviously one of those types of indirect rates might be fringe benefits. You can call it different things, and different parts of your company could have different benefit packages or whatever, but basically it's the cost of your payroll taxes, your company benefits, and your leave. And I tell people roughly, I expect that fringe rate to be about 30% for most companies. I come up with that because you've got payroll taxes, Social Security and Medicare is 7.65. You've got state unemployment, federal unemployment. And I usually throw workers' comp in there because it's a statutory requirement. And most of the time, if I had to guess, I'd say, well, let's say 10% for payroll taxes. That's a pretty good number. The second component is leave. Most companies have 80 hours worth of holiday and 120 hours worth of vacation and sick or paid time off or annual leave, whatever you want to call it. So 200 hours worth of leave divided by 2,080 hours in a year, 52 weeks a year times 40, yeah. That's about 10%. So that's another component. The third component of fringe that I'm looking at is the company benefits. That's going to be the 401k match, the 401k admin fees, the company paid health insurance, dental, life, AD&D, whatever is in your company mix, whatever the company paid component of that, that is where I get the other 10%. For a company that's quite young, your fringe rate might be less than 30%, but you want to be budgeting toward that number. If you're companies that are mature, that have a lot more seniority, that have a richer benefit plan, would obviously have a higher fringe rate. So it's direct labor cost, it's fringe pool cost divided by what I call productive labor. Productive labor excludes leave. So it's the direct labor charged to your contracts, it's the overhead, and the G&A. Overhead costs, that's the cost to support your technical workforce generally. So it's going to be indirect cost to support an engineer for training, or sending somebody for equipment to be calibrated, or it's a certain amount of administrative cost that's being incurred. So the support cost of your direct labor is generally it, but if you've got training, if you've got software, if you have other support costs, I usually call that overhead. So overhead pool cost divided by direct labor cost. By the way, I want to point out that over here on the right, I put there's variations depending on your company strategy and business practice. So there's on-site and off-site rates. Some people call on-site that it's on the military base. Some people call it, though, that's at our office, is on-site. So it gets confusing, but I usually say, well, look at the one that's higher. That's the one that includes the facility cost. So on-site and off-site overhead's one way to call it. Some companies will also have part-time overhead, or they'll have, here's my manufacturing overhead versus my engineering overhead. Sometimes they'll say, well, here's my California overhead versus my DC overhead. So there's a lot of different ways to put that together. It could also be based on, here's my services group and here's my staff augmentation group. So it can be different depending on what kind of work you're doing. G&A, that's your corporate cost. So G&A is the cost of running the company. It's usually finance, human resources, your executive team, professional and legal, audit fees, all of those kind of things that are part of running the company itself that are really independent of the kind of work we do. And so those will be your G&A cost divided by your total direct cost, like so direct labor, subcontracts, travel, plus overhead. So that's what the incurred cost submission is trying to make you do. Prove it. How much you spend. Show it to me. I want to audit that. So I created a model a long time ago, and I work on it a little bit every time and change it around. But the main reason I created this model is because in setting up accounting software, I was always trying to talk to people about, tell me how you calculate indirect rates. And it was hard to get something that I could flexibly take from one company to the other and just change around a little bit so I could figure out what their rates were, because that was part of how we decided how we wanted to structure their chart of accounts and how we had to put certain settings in their accounting software to do indirect rate calculations. So what I really said is, let's back off and say, what are we doing with indirect pools? Why do we do this? Well, we want to make sure that we are recovering all of our costs, all of our direct costs, which is what we spend for the product or services that we're offering, plus those incidental things that we need to charge our customer for if we want to end up with some kind of profit. We want to be reasonable about it, but how do we get there? So to me, what we're doing with the incurred cost submission is taking an income statement and taking those costs and identifying these ratios or indirect rate relationships of fringe, overhead, and G&A. So what I've done on the left-hand side is there's my income statement, and I have very much simplified this into, I've got my direct cost up at the top, which is your cost of sales. I've got a section for indirect cost. In this case, I did fringe, overhead, and G&A. And one thing I've done here is I've split it into, I always identify whether something is labor or non-labor. The reason that's important is because labor is in the base for fringe, and so I have to make sure that I get that part of the math right. So anything that's labor to me is always separately identified. And think back just a few minutes ago when I was talking about that Schedule L that is so complicated. I got to tie my 941 tax reports to my labor distribution, my gross wages. So I definitely have to have my labor account split out very carefully so that I can create that kind of a schedule. So I've got here fringe pool divided by fringe base. So I've got $300,000 worth of fringe cost. My fringe base is $1 million because it's not just my direct labor. It's also some overhead labor and some G&A labor. So 300,000 divided by $1 million, well, that's 30%. The second big column I have here is for overhead, and in this case I did a simplified version where I've just got one overhead pool. So I've got My fringe applied to direct labor. I've got my overhead labor. I've got some overhead non-labor, $639,000 total. In my case, which may not be the case for everybody because there's different ways to do this, my overhead base is just direct labor. So I came out with a 91% overhead rate. People always ask me, what's the going rate for overhead? Well, there isn't a going rate for overhead. If I was in a manufacturing company, because they've got so much equipment and depreciation and support costs for that equipment, my overhead rate is almost always going to be over 100%. If I have a few guys working in trailers out on an army base, and all I really am doing is running their payroll and doing a little bit of support costs for them, my overhead rate's going to be really low. So you can see you could have anything in between. If I have to have people in my office and I'm providing them computers and they've got training and they have software that I have to buy them, then my overhead rate's going to be different. So those are all things that you have to take into account. And another big element would be, where are those employees located? Are they in California? Are they in Alabama? There's going to be different overhead rates. I believe California would be more expensive than Alabama. Okay, so let's talk about the last element, which is G&A. That stands for General Administrative. So I think I mentioned earlier, that's the cost of usually finance and human resources and your executive management team. And there are obviously some gray areas between where some companies put certain cost in overhead and others put it in G&A. But in any case, I came up with a G&A pool of $140,000. In that pool, I've got some allocation for fringe benefit to my G&A labor, because I have to carry that across. And then my G&A base is really all of my cost of goods sold type cost, my direct cost, plus the overhead. Overhead's part of the base for G&A. What I also wanted to point out, and it took me years to figure this out, but when I'm trying to figure out, did I do something wrong? Did I forget a cost? Did I under allocate something? Did I count something double? I always try to go back to this little section, which works if you have just G&A and you don't have material handling. If you do material handling, there's another trick to it. If you think about it, what I'm doing is taking my G&A pool plus my G&A base. My G&A base includes cost of sales and everything but G&A. So if I add G&A pool plus base together, $140,000 plus $1.5 million, that's $1.64 million. And if you look over here to the left, back to my income statement, my total direct cost and my total indirect cost come to the same number. So what you're doing is saying, how do I identify all of my allowable cost? And how do I make sure that I've distribute it all correctly? And so that's a check that I came up with a long time ago, and it's helped me a lot of times. So this is what I call my RPM. So let's give some examples of the ICER electronically. So first off, I mentioned you can go download it off DCAA.mil. They also have a demo copy of the ICE, and some people find that useful. You could try to print this out, but you got to set all the ranges. It takes some time or whatever. But doing the first ICE is the most difficult one. You've got a lot of uncertainty. You don't know if your data is right. You don't know if you're doing it right. So it's like, is it me or is it that or what's going on? So just take some time with it and know that you're probably going to have to do a couple of restarts before you get it right. So I don't know where they pick these colors, but there's a lot of colors in here where they're referencing things. I try to pay attention to those, but I also don't agonize. And sometimes when we hit these buttons, I will find errors, and I don't know whether it's because I hit the wrong button and I changed this and I shouldn't have. But in any case, I use the basics of the ICE, but I do sometimes go in and I just say, I'm changing this formula to make it work. And that's what you have to do, the same way you have to do with proposals these days. So you go and download the ICE and you get started on it. There's a setup sheet. This is really handy because I can put in here my company name, where I'm located in the fiscal year, and that's going to put the headers on all the pages, so that's pretty handy. Then it talks about your accounting practices, and again, I always have to think about this. But the first one, it says, do you have a value-added G&A base instead of total cost input? What that means is if you have material and subs handling, the reason you did that is you pulled those costs out of the G&A base, and you did it because you said it doesn't cost us as much to do a subcontract as it costs to do everything else. So you would check the value added if you have subs or material handling. Otherwise, you wouldn't. Final indirect costs are accumulated by a department for most small businesses. I don't see that, so I've never really checked that. There is a final indirect pool with materials and subs as an allocation base. So it's kind of like if you checked the first one, value-added G&A base, you would also check the third one. And then there's also a box there that says there's a separate pool to allocate fringe cost. With most of the companies I work with, I have a total fringe pool. I collect all my fringe costs together, and then I allocate the cost of the fringe pool based on a percentage to the overhead and G&A pools. So I might have a separate fringe pool. Mainly means I collect it in a series of accounts and I allocate it to the other elements. Now there is something called a 3-tier allocation where you have here's fringe, here's overhead, and here's G&A, and you actually bill for them as 3 separate elements. I see that more on NASA contracts than I do on Army or other ones, but just know that that does happen. The reason people might have a 3-tier fringe rate would be if they've got most of their employees are IT professionals, highly paid, not much in benefits, and their fringe rate's going to come out to 28% or so. And then they bid a cost plus contract that has collective bargaining or service contract act requirements. And those people, gosh, they could be on the contract for a long time. I mean, some of them could have been on the contract since the 90s. They've got all this seniority and service, and they're not going to leave a good job. So their fringe rate can be really high. I've got one that I'm working with, and the fringe rate is almost 70%. So you don't want to average a 25% fringe rate with a 70% fringe rate, or you won't recover all your cost. So these are some of the reasons why we have to go through all of this work, is to prove that, where do we come up with those numbers? What are our actuals? Can we justify what we did? So you fill it out to the best of your knowledge and belief, and you hit the click Run Setup button. But again, be prepared. You may get into it, and you'll be working on it for a little bit, and you go, this doesn't seem right. So, be willing to go back and start over because getting that first one does take a lot of time. Okay, I taught you about the checklist, which I also use, by the way, to kind of control workflow, like who's working on what and when are we going to get that done. Schedule A is what we call the summary of your indirect rate. So it's where we've got what's our final G&A rate, our final overhead rate. In this case, it also shows the fringe and the facilities rate. And what it's doing in that reference column is that there's a spreadsheet to back up each one of those. And what happens is when you change it on the detail spreadsheet, it's going to change it on Schedule A. But this is the good place to look at the summary. Those yellows and greens are really to cross-reference to other spreadsheets. I do the best I can on that, but as I said, sometimes I start coloring everything so many different colors I can't remember what I did. Schedule H, I think I mentioned earlier, that one takes some time to prepare. Your accounting software may produce something, otherwise you might have to come up with it yourself. But what they're looking for here is they want a list of every contract or job that you've worked on. They want to know what the prime contract number was. They want to know your customer, and they want to know what type. And you're going to put the types of contracts in the different section. And so for your cost type contracts, they're up there at the very top line. They want to know how much was direct labor, how much was travel, material, ODC. And by the way, you'll change some of these headlines around if you've got a supplies suffix because you've got a lot of that. Insert a column and put it in there. This should match your accounting system. You want to have it be traced back. And I usually also go in there and sometimes I'll put the code if it's an account code or something like that. Because it just makes it easier when you're trying to explain to people, if you've already put the codes in there, it makes it easier for them to do the audit. This has cost type. The next section is other flexibly priced, and then time and materials, which is usually the other section that you fill out. You keep going down, and it also has fixed price and commercial work. Now, they're not going to audit your fixed price, and they're not going to audit your commercial work, because that's not part of the scope of what they need to do. You have to list it, though, because they're looking for the total of direct labor to tie back to your income statement. They're looking for the total travel, material, and so forth, all to tie back. So you've got to include that, even though it's not being audited. You may have some more summarization there, just so you know. You don't have to put as much detail. The other thing it's doing is there's columns here that say claim cost And what they're asking you to do is apply your overhead and apply your G&A so they can see how much money you've spent. By the way, there is a column that says total COM, C-O-M. That's for cost of money. Most small companies don't have a cost of money. What that was, it's also called cost of facilities capital, and what that's intended for is if you larger organizations would have a lot of capital equipment. Like if you're building airplanes and you got a lot of capital equipment, they said, well, we have to have a way to recover our investment in our facilities. And so it was a way to really create something that I would call imputed interest. But as a small business, you'll see cost of money or COM. You can just ignore it. Just put zeros in that column. Schedule I. This is the other one I said takes a fair amount of time. Not only do you have to list all the contracts you just listed on the earlier pages, but you also have to show how much you had for cost in prior years, and sometimes you'll have the audits have been completed on those, and that'll go in the settled column. But they're looking for total cost that's been incurred, and it will be at whatever your claimed rates are. So if you did 2013 and you said, here's my overhead and G&A, that's what goes into the prior year column as you're doing your add up for your cumulative cost. It also has a column that says less contract limitations. That would be if you had a $3 million contract, but you'd spent $3.2 million. So, you reduce that because you had that much cost, but you're really not technically claiming that because you're not getting paid on it, so you wouldn't want to claim it. It's also asking for information about your cumulative build. So you go to your billings and you can get the detail of the billings. And if you think about it, it's mostly up at the top section is your cost plus. Your billings include fee, and it also might include withheld fee. In order to come to the total billings, you're going to have to include both of those. But when you're doing the comparison, it's cost to cost. So it's kind of like what I talked about earlier, where you include the fixed price that's not being audited. So you'll have a column in there. And by the way, I add some columns in here to make it easy for me to figure it out and trace it. It's okay to add some detail in here because it'll help you later on when you're trying to figure out, what did I do? Why did I do that? You can also see the second section says Schedule K, time and materials. And what they're asking for in those columns, it's not cost so much as it is total labor billed, because they're not auditing the cost on a T&M. They're saying how many hours and how do I trace it. Now they are looking at the G&A on travel or ODC or something like that, and that's going to be a smaller number, but that is part of the comparison that you have to take a look at. So when I interpret Schedule I for time and materials, I'm thinking of the total labor billed as a lump, and then the direct cost with the applied indirects. And what they're looking for here is how much did you over or under bill? Do you owe the government money or does the government owe you money? I already mentioned the Schedule L, and whenever I think of Schedule L, I think of labor, and that's why I think, wow, this is going to be a lot of work. Again, you're trying to tie out your timesheet labor expense to payroll. Kind of tricky. In this example, you can see they've got G&A salaries, holiday wages, and all those other things. I make those account numbers and the account descriptions and the amounts all agree to my general ledger, and I actually go back to those earlier schedules where there's a schedule for G&A, and it's going to have G&A labor. And so I'll tie in account by account number because we want to have good traceability. I had it a long time ago when I first worked for Boeing. I was the accounting manager, and Barry was the guy that did all the proposals and project management and stuff like that. And I didn't even know what an incurred cost submission was. Well, he submitted it, and later on when the auditor came in, they took a look at it, and they said, well, it doesn't have any account numbers. Well, the model doesn't have account numbers. And Barry didn't include them because he just thought it was convenient to lump together similar accounts because he just thought it was going to be too long if he didn't add together postage and office supplies and printing and different things like that. Well, we ended up having to redo the whole thing because they couldn't trace anything. So always think about this is how would an auditor tie this back to your general ledger? So you definitely want the general ledger account, and wherever you can, if you've already used a number someplace else, reference that number or copy those copy formulas to make it reference those numbers. It'll really save you a lot of time. Schedule L, I've already complained about it enough, so I think I covered what we needed to, but the main thing is include your general ledger numbers. Scrub your general ledger balances to make sure you don't have a general ledger account that has some labor, like business development labor, and some business development travel in the same account, because it's not going to work, because you've got to have just the labor, because that was paid out on payroll. You'll also have to take a look at, as I mentioned, vacation pay is how it went through payroll, but that's a balance sheet account. So there's going to be an adjustment in here where you have to, it says down there, prior year accrual, current year accrual, and other adjustments, and that's where you put those type of things. And you will have to explain it. The other thing that drives me crazy about this is I'll do it, and one time I'm 50,000 over, and the next time I'm 50,000 under, and it just makes you feel like you're crazy. It takes some time. The other thing is, once you've done it once and you understand how it works, you go back into your current accounting system and say, hey, we're going to make a couple of changes to make this more detailed, because it's an awful lot of work. Well, I really have covered everything that I wanted to talk about with incurred cost. I hope this has been helpful for you. As I mentioned, the first one is a lot of work to do. It's a great learning experience. It helps you to become more effective in supporting your executives and your program managers. And, if you like accounting, it's pretty fun. Thank you. I'm not sure it recorded the whole thing. And so they're talking like 45 minutes. I really like doing it.
Yeah, I got the thin crust, which is good. And then I got a couple of garlic wings over there too. And Valerie did text that she is gonna come over, but she doesn't wanna break the karma of the yeah, and they've all been in. But I'm not sure, like, I don't think, Kevin Mears has always had a lot going on, but you never know. That is funny. If you did it like they were everywhere like that, like the Cinnabon place in the mall.
Yeah.
Like, welcome to Moe's. Yeah. came out. And like, I scraped off like 2 pieces of the top, and then just ate a little bit of the crust, so. I think once in a while, it's really good. That's what I did. Okay. Look at who puppy got up. I never did notice. And you all dropped down everywhere. Look at my ears, my legs, my back. You know what? I don't know. The vine is here, and it's been cleaning itself all afternoon. I tried to clean the spot with a little. It's really not too much silver. She's gone. Not think so. You know, surfers are like it. So, well, there's no words. This is the simple look. I don't know how it happens to me. That's all done with, won't it? Wanna go out?